Hello, and thanks so much for tuning in to BloombergQuint. I'm Mathew. Now, over the next few minutes, we'll be discussing the data that was released by the Association of Mutual Funds in India for the month of December. And as a whole, of course, we've seen that mutual funds saw an outflow, or rather an inflow of just under 2,970 crore rupees, with equity mutual funds continuing to see outflows for a sixth straight month. But the SIP flows, the way I see it, seem to be encouraging. Joining me to talk about all of those numbers and the trends perhaps that they throw up is NS Venkatesh, AMFI's Chief Executive Officer. NS, thank you so much for taking the time.
Thanks, Alex, for talking to me. It's a good new year, I would say, for the mutual fund industry, in the sense that the top line number has gone to around 31 lakh crores, which is an all-time high. And if you look at the category-wise sort of flows, we find that for the debt flows there are positive flows, but for the equity there is a negative flow of somewhere around 10,000 crores. That is, and for a sixth month consecutively, the equity is showing a negative flow, the net flows. But if you look at the gross numbers for the equity, even for the month of December, you will see it somewhere around 26,000 crore of fresh money has come in, and 36,000 crore of outflows have happened, giving a net flow of 10,000 crore. This indicates that there is even no interest in the equity mutual fund. People are investing there. People are trying to participate in the equity rally. But at the same time, whatever is the net outflow is mainly due to profit booking that has happened, where people are seeing returns coming back into their mutual fund industry in the second half compared to the first half. So people want to encash that returns at this stage and then start reinvesting back into the mutual fund industry. So that is what is happening. So I'm not alarmed by the way things are moved. I would say that maybe come budget, we will see a little bit of positive flows coming back, positive net flows coming back into the equity mutual fund. That is what I see.
Some have actually suggested that that is in fact what is happening with these levels that we're seeing on the benchmarks and the kind of V-shaped recovery that you saw in the markets. If it's not happening in the economy, that's the question that is perhaps for another day. But in the markets, we've seen that V-shaped recovery. So people probably taking money off, considering that maybe they think that these levels may not be sustainable, at least in the short term. But having said that, I do want to get your view on the debt side of things. What are the trends that you witness there?
On the debt side, if you're looking at it, the interest rate stance is very, very positive or beneficial for the debt market. The monetary policy is accommodative in nature. Liquidity is very much flush in the system. So because of which the yields are falling down dramatically. So this is the time for you to stay invested into the debt mutual fund. And that is what the investors have also seen. And money has flown in into the mutual funds, especially the corporate bond fund, banking and PSU funds, those sort of funds. The corporate bond fund, I would say, the asset class within the corporate bond fund, after the March-April episode, people have reallocated. That is, the fund managers themselves have reallocated, and most of the funds are currently having AAA papers in their asset allocation. So it's only a question of somebody chasing an yield. Instead of putting it in a bank FD, they are trying to invest it into the corporate bond fund, which bears a negligible risk at this particular point of time and getting a superior yield. So that is what is happening.
The outflows from the gilt funds, are they indicative of profit booking there as well?
Yeah, definitely. If you look at the outflows, people are taking money because they feel that the yields have fallen down. Let me encash it at this particular point of time, and let me await for the next monetary policy stance to be communicated by the central bank, because there are some small fears of inflation coming up. So people are trying to see whether the central bank is going to lean towards fighting the inflation at this stage, or whether the central bank is going to be again accommodative and provide for growth at this particular point of time. If you ask my particular view, I would say that at least for the next couple of quarters, the central bank will definitely provide impetus for growth rather than fight the inflation, because this inflation is not growth-led inflation at this stage.
We watch the SIP number very carefully to understand, because this is long-term money usually that is coming into the mutual fund industry. Last month, there was perhaps a little bit of a hiccup, if you can call it that, 7,300 odd crores coming in. But at that time, you said, don't worry about it, because the last few days of November were holidays, and that money you expected to come in December. And indeed, we saw a significantly higher number coming in of about 8,400 odd crore in the SIP figure. So are you enthused by that number? The net figure seems to be around 7,900 crore. And does that indicate that people are staying invested for the long term to you?
People are investing through the SIP route. That is where the number of folios, new folios in SIP is somewhere around 6 lakh folios in the new SIP route which has come in. So I would say that people are taking the SIP route to participate in the growth of their investments. The 500 crores, if you adjust for that, in November it would have been 7,800 instead of 7,300, and December it will be 7,900 instead of 8,400. So marginal increase from 7,800 to 7,900. But I am quite confident that the people will continue to invest through the SIP route, especially the pure retail people will invest through the SIP route, and we should see more inflows coming into the SIP through the SIP.
All right, so that more or less, in fact, this is quite the easy month to understand, because we've seen a continuation perhaps of the trends that we've seen over the last few months. But I do want to understand, we're just a few days away from the presentation of the union budget for next financial year. Have there been any representations that have been made by AMFI to the finance ministry?
We have given some recommendations. One is relating to getting a level playing field between ULIPs and mutual fund units. The second one is relating to making units as a specified asset under Section 54 EC. The third one is relating to requesting the government to pass a notification whereby the doing business easy, whereby the KYC, we want the KYC rules to be harmonized between CKYC and eKYC.
Okay, so it is quite an interesting space to watch out for. Let's see what the finance minister actually presents when she does present the budget for the new financial year. It's been a pleasure as always, Mr. Venkatesh. Thank you so much for joining us.
Thank you so much, Alex. Thank you so much.
And to you, dear viewer, thank you so much for tuning in. I hope that this conversation was useful to you. You'll find a lot more on the website, BloombergQuint.com. So don't forget to check it out.